Hey everybody, welcome to my channel. My name is Justin. Today I want to talk about Ford, ticker symbol F. I want to know if Ford stock is a good time to buy right now. And you can see on the screen right here, this is the Ford Lightning, which they are going to come out with in 2022. I heard in the last couple of days when Ford announced this, they had over 70,000 deposits for this vehicle. And it's the #1 vehicle sold in the US, and it's been the #1 vehicle for quite a while. So it's nice to see Ford is going that electric route. All right, so Ford is a $63 billion company. They did about $130 billion here in the last 12 months. They have 186,000 employees. So their sales is made up of 69% from North America, and about the other 20% roughly is from Europe. All right, so now let's take a look at the financials. All right, so right now the company is trading at a PE of 16. Historically, they've been between a 4 and all the way up to over 200. But typically historically they're definitely under 20. And I would say over the last couple of years, I've seen them around the 10 range just in general. The earnings per share was around 1 in the trailing 12 months. If we go take a look at their income statement real quick. So roughly $30 billion over the last year. They had about $4 billion of net income for the company. Now, as we look at their balance sheet for cash is going to be roughly around $25 billion. So a good nest egg of cash right there. And I know their debt is pretty high. It is going to be $110 billion. So obviously that's a lot. It would take them well over 10 years to pay back their debt based on their free cash flow. But I would say in general, General Motors and other vehicle maker companies do have high debt just because they have so much CapEx. So that is not too surprising, but they do have a lot of debt. Just good to know. And then as far as cash flow goes, this is really impressive. So their operating cash flow was $29 billion trailing 12 months. Take a look at their free cash flow, $23 billion in the last 12 months, $18 billion in 2020, $10 billion in 2019, $7 billion in 2018. So this company is just a free cash flow machine. And I looked at General Motors, and they're actually negative over the last 5 years. So it was surprising for me to see, at least, how good the free cash flow has been for Ford just in general. And keep in mind too, as far as free cash flow goes, they've actually had an increase about 10% per year on average. Their sales growth has actually been down about 7%, and their earnings per share has been down about 48% over the last 3 years. So definitely keep those in the back of your mind. Let's go take a look at a comparison against other companies in their same industry. So we're comparing Honda Motors, General Motors, Daimler, Ferrari, and Tesla. So if we look at PE, this says 15, Yahoo says 16, so they're about 15, 16 PE. So they're kind of on the lower end. It looks like GM, Honda is on the lowest. Ford PE, Ford's around a 15, so kind of in the middle a little bit. Now, what's really impressive is the price per sale. So that $130 billion they did, keep in mind their market cap is 63. So they're doing double the amount of revenue compared to their market cap, was just phenomenal overall. Their price to earnings growth, their PEG is under 1, significantly under 1, 0.29. That is really, really good. And the reason for that is analysts think this company is going to grow 53% over the next 5 years. Now, I've looked at different analyst projections. I've seen anywhere from like 20% to 60%. So in general, analysts are pretty bullish on this company going out into the future. But keep in mind, they've had pretty bad earnings last 3 years, that 48% drop. So that might be why that they have a good chance of increasing their earnings over the next couple years. Right now, they don't pay a dividend. This company has historically paid a really good dividend. All the way up to, I think it was say a year and a half ago, their dividend was pretty high. I want to say 8-9%, something like that. But they have paid dividends. They stopped doing that. They wanted to conserve cash, which was the smart thing to do. Their gross profit margins, operating profit margins, net profit margins aren't very good, I would say, across the board. Vehicle manufacturers don't have great margins in general, but Ford has kind of ranged as far as the net profit margin going from being negative to being 5%. Last quarter they did 3%, so not great profit margins there. Current ratio 1.2, pretty decent, kind of in line with a lot of the other companies. Long-term debt we already talked about. A lot of the companies do have a lot of long-term debt. All right, so let's take a look at MSN Money real quick. And what I'm specifically looking for is the ROIC. So Ford, the last 5 years on average, has a negative 1.8% return on invested capital, and they've had about a 2% positive over the last year. So, that's not very good. The return on equity has also been negative the last 5 years. I like to see companies being consistent at a 10% plus ROIC, so that is concerning. And ROIC is basically a company taking capital, reinvesting itself, and generating more net income. And it's very beneficial for the shareholders. So Ford isn't very good at doing that. Now let's go take a look at my valuation on this company and see what it looks like. So I do 4 different valuations trying to find buy target prices. I look at a margin of safety, which really looks at the earnings per share. I have an estimated growth, looks at the PE over the last 5 years, and I have a discount rate of 3.2, which is my risk-free rate of return on a loan I could get on the market. So this is really driven by earnings. And I know analysts are saying they think they're going to grow 53% over the next 5 years. I have a really, really hard time believing that, especially with sales growth dipping 3% over the last 5 years. Earnings per share growth has dipped 25% the last 5 years, dipped 48% the last 3 years. So it's hard for me to believe that 53%. That seems very optimistic. So I'm being really conservative here. I'm saying 10%. So based on that information, my buy target price is $10. The stock price is $16. So from that standpoint, it's overpriced. But here's where it gets really interesting. So my next 3 valuations are really looking at cash flow for the company. So this 10 cap valuation is trying to get owner's earnings by share, and then I want to pay less than a 10-time multiple of the company, which is like a 10 cap. So based on that information, my buy price is $59 and the stock price is $16. So that's a really good indication Ford has some really, really good operating cash flows that are coming through, which we saw in that free cash flow. So right now it's showing a 267% being undervalued just in general. Now let's go take a look at my discounted cash flow for this company. And basically what a discounted cash flow does is look at a trailing 12 months cash flow and then project out what the cash flow is going to be and then discount it back today to try to find the intrinsic value on the company. So I'm saying a 10% growth over the next 3 years, then only a 5% growth from 4 to 6 years, and then a negative 5% growth. And my thought on that is, the Ford Lightning is going to be unveiled in 2022. I think that's going to be a big seller. I really, really do. That the Tesla truck that they have, that is a pretty cool looking truck. But as far as, when someone wants to go buy a truck, they think of Ford. And I think they're just going to, Ford's, I think, going to do very, very well. And obviously they have a huge reputation to hold up, having the #1 sell vehicle over the last 40 plus years. So I think over the next 5 years, they're going to do well. 53%, I don't think, but these are my estimations here. So based on that, I'm coming with the intrinsic value price right now of $44. And I'm willing to pay a 30% margin of safety on that. So I'm saying buy price is $31. For current value. So basically it's half of what it's selling for right now on my discounted cash flow. Now I was kind of interested to see how General Motors looked. And General Motors, since they have a negative free cash flow over the last 5 years, when I did my discounted free cash flow, it was not very good. So Ford looked way better than General Motors, which kind of blew my mind actually. Now the last one I like to take a look at is the price to free cash flow. So I'm looking at the last 4 years free cash flow. Average is $11 billion. My multiple, it depends. I use it between a 10 and a 30 depending on the company. This is a blue chip company. I don't expect a ton of growth going out into the future, so I'm using it 10. That's one of my lowest multiples that I use. But still, based on all that, I feel that the market cap should be $117 billion right now. And again, they're trading at $63 billion. So my target buy price based on my price to free cash flow is $29. So that's still looking really good. So if we look at a summary, again, my margin of safety is looking more at earnings. These other three are looking at cash flow for the company. So, my average buy price from all these would be a 32 with an intrinsic value of 44. So that's about a 27% margin of safety. And it's at a $16 buy price right now. So, this one is really interesting. I guess it depends on how you look at this company. If obviously if they do truly grow 53%, it's a no-brainer. You can make a ton of money off this company. But even growing at 10%, you should do really well with this company. And keep in mind, historically, this company has paid out quite a bit in dividends. And if we go back to my Schwab account here, we can go take a look at that real quick since we're talking about dividends. So their 5-year dividend yield has been around 5%. And I know like a year and a half ago, it was around I think it was 8-9%, something like that. But that's just because their stock price dropped so much. So that's pretty interesting. So they could start using a lot of that free cash flow to start, paying some of those dividends back again if they wanted to. Now, if we look at a pricing chart, if we look over the last 5 years for Ford. All right, here we go. So, you're looking at, it was $13 5 years ago. It's been down, dropped all the way down to about $4 after the whole Rona situation. And now it's all the way back up to 15. So that's interesting. Now, if we take a look at the last 6 months, take a look at their 10-day moving average, it's trading well above the 10-day moving average right now. And if we look at the MACD, which is basically an indicator of money being pumped in or out of the stock. And right now, a lot of money is being pumped into the stock right now. So that's kind of interesting too. If we look at the stochastic, I'd imagine it's probably the same. Yeah. So this one kind of indicates if it's overbought or oversold right now, saying it's overbought. But so interesting. Again, I just think if you're looking at this from a free cash flow standpoint, even at the current levels, it should do really well. And this is not financial advice. Do your own research. But it's certainly really interesting. For me, I got to dig into and look at this company even more, since these buy prices are a big indication that it is a time to buy. But I'd love to hear from you guys. What do you think about Ford? Do you own Ford? What do you think about the other car companies? Do you think one is better than another? I'd love to hear from you guys. Thank you so much for watching. You got some value, smash that thumbs up button. If you like this kind of content, I encourage you to subscribe to my channel. I'll catch you guys on the other side. Take care and God bless.